Welcome to the Property Couch, where each week you get to listen to two of Australia's leading experts. Bryce Holdaway, co-host of Location Australia on Foxtel's Lifestyle Channel, co-host of Escape from the City on the ABC, and partner of Empower Wealth Advisory. Ben Kingsley, chair of Property Investors Council of Australia and the founder of Empower Wealth Advisory, named the 2018 and 2019 Property Advisory Firm of the Year. Stay tuned as they bring you the insider's guide to property, finance and money management.
All right, folks, welcome back to the Property Couch. Welcome back to you too, Ben. How are you?
Just wow. I mean, I'm just coming off the highs of the summer series, and now we're into it.
Surfboard back in the rack?
We are into it. It's February already.
Ben, but it's still summer. Why have we cut the summer series short when it's still summer?
Mate, have you been in Melbourne through summer? Seriously, this has not been a summer. It is a joke. Melbourne just said, you know what, tough year. You don't get rewarded. No summer. Like, I think we've had,
good way to think about it. I was actually having this discussion with Andrew over the summer thinking, because I've been living here long enough now to go, well, we just don't have a summer in Melbourne. Like, December's ridiculous. I bring family over from Perth and they just look at me and they go, what is this? We want to go home and actually get some sun on our backs. So I think it's a February, March thing here in Victoria. So.
Exactly. Get over the Great Divide and you have a summer. Stay on this side of the Great Divide and it's just like these clouds just sit around. Right? Anyway, but we love Melbourne, cultural hub, sporting capital. Speaking of which, Pies had a good win to open up the season. Got on girls. Well done. Mate.
Yes, and Fremantle's doing very, very well too.
Yes.
Hey, so the reason we don't do summer series in February, Ben, is because it's the pointy end. It's the start. It's really where all the action starts to happen. We're hotting up the properties, even though January was hotter than usual, particularly in Melbourne, with all the agents wanting to sort of do a bit of catch up from their lockdown last year. But so there's a bit going on. So we got a very exciting guest today. We're doing our property market outlook 2021. With a heavy-hitting guest. So stick around shortly. We're going to have a chat with Cameron Kusher, which is amazing. But before we get there, Ben, just a couple of things I want to highlight. We launched increase in our socials over all of December, January, and we're doing it going forward. So lots of content, lots of free content, learning content on all of our socials, in particular Facebook and Instagram. So Stiggy will put some links in the show notes for you just to duck over there, have a little look. There's some really, really great carousels that you can go and check out. So just to remind folks of that, but also just a little thank you to all of the folks for our summer series. It's the exciting part of the year. We've said that a number of times. It just transforms people's lives, and it just goes to show that other people can do it, not just you and me. So a quick shout out to Brendan Deeth, Renee Bransomer, Max Roman, Demis Omadeo, Michael Mussolino, Megan McVeigh, Eric T., Kelly Vickers and Sam Phoenix, brave souls who wanted to come on and share their story, Ben. So just wanted to pause and reflect and just remind folks that was brave for them to come on, and hopefully everyone enjoyed it.
Yeah, well, I mean, we have encouraged people to run a money smart system, organise and control their money, and then basically start that financial transformation. So it is definitely one of the most important pieces of work we do. To help guide those, and to hear their stories is just incredible. And what we have seen from it is, again, more people signing up to the My Wealth portal. So over 32,000 people are now registered to use the platform, and they're getting themselves organised. And it's just great to see that in terms of they're having a go at the simplest money management solution out there. No need for multiple accounts and buckets everywhere. And a proven way. And we heard how much just even the 7-day float transforms people's lives in terms of knowing that they're in control of their money. And then, wealth comes off that. So, throughout the course of the year, we really do talk a lot about the wealth story, and property being our preferred vehicle for that. But if you don't get your money in order, you're going nowhere, because you won't get lending. And if you're not getting lending, you can't go out and buy that asset that you're looking to buy and basically, build on that wealth.
And a little shout out to our team, Ben. It takes a lot of work to get that summer series kicked off and up and running. And Ivis paid a lot of attention to make sure we tried to get as much of a cross section as we could, different age brackets, different agendas, different walks of life to it. I think she succeeded really well in setting that lineup up. So well done, Stiggy. Thank you for that. And well done to Emma and Artie as well. Hey, I want to do a shout out to anyone listening to this, Ben, that was impacted by Summer Series. And I want people to set themselves a goal, because we will do a call out again towards the back end of this calendar year, where we're going to say, hey, look, who wants to come on our Summer Series? And you can see for all walks of life that we get on, someone who was impacted, who wants to set themselves a goal to come onto our Summer Series. I want to set that challenge out to folks, because if you want to transform your financial future, it's really simple to go and register for the platform, get the free book, and actually put it into place for the next 10 and a half months. And so then you can come and tell your story on the podcast, because we want to hear from you. So I'm putting it out nice and early. Set the goal, set the news resolution that you are going to come on our Summer Series in December and January this coming year. Make sure you're going to do that.
And hey, Bryce, it's really easy. All you do, we've made our book, our second best-selling book, Make Money Simple Again. So our bestseller, free. All you need to do is go to makemoneysimpleagain.com.au, and that not only gives you the book, but it also sets up your free account in the MyWealth portal to run your money smarts.
Can't be folks. No barriers to entry whatsoever. Set the goal. Come on Summer Series. We cannot wait to talk to you in 10 and a half months' time. I'm looking forward to that. Hey, we asked for part of our Summer Series was for a survey. It was very successful. Got over 1,000 people who came back to us, Ben, gave us heaps of feedback, told us to shut up at the footy, told us to keep the footy. It's confusing, but we're going to tone down the footy. But obviously there was heaps and heaps of feedback, which we really, really appreciate. And of course, we put out a carrot to say, if you give us some feedback, we're going to give you a free report, which we've given straight out to everyone, 7 grades of financial wellbeing. But also, Ben, there was a winner. And if you go to our socials, you'll see the process that we went through to find that winner.
A random winner.
Random winner. So we're excited to say that Tom Abbott, you are the winner. We have got your email address. We're going to send you a little link just to reach out to you to say, hey, you're the winner. But Ben, what did they get? What did Tom get?
Well, Tom has got access, Bryce, to all of our property research platforms. So we have obviously under Select Residential Property, which is our property research arm to help anyone make the decision and understanding demand and supply at the suburb level. So we've got some amazing products there. We've got obviously location score, DSR data. We've got suburb growth, which is really cheap and easy to do predictions up to 1, 2, 3 year capital growth predictions at the suburb level by houses or units, sell or hold. So yeah, all that's going to happen is Tom has a $500 gift voucher and he can choose to use it any way he wants. So when he's got an idea in terms of what he wants to do, he can contact us and we'll get him those reports out or the subscriptions out or whatever he wants to do. So congratulations, Tom.
Well done, Tom. That's exciting. So hopefully you get some real value out of that. And mate, who knows? Tom might be the person that comes onto Summer Series and tells us how the year went, Ben. But you've got to pick a webinar next Tuesday.
We do. So not only are we starting the podcast, but obviously Picker, which is an association run by property investors for property investors. It's a non-for-profit. The idea is to help you organise and educate and obviously advocate on behalf of all of the property investors out in the country. We're starting off with a huge webinar, and that is, we have got one of Australia's top mortgage brokers who was running one of the biggest franchise networks in mortgage broking. He's going to come on and share his wisdom. Ross LeCane is going to come on and share his knowledge of how you set up. We talk about property is not just a game of bricks and mortar, it's a game of finance. Ross is going to share all of the ideas around strategy, structure, and how to get lending in 2021. So I can't wait for that. But here's the deal, Bryce. It's not someone from the public can go. You need to be a registered member of the association. $5 will get you your membership for 12 months, $20 for 5 years. As soon as you are registered, we are sending out reminder emails right up to the event of that date. You will see that, and then you can register because it is a private webinar for Picker members only.
Go for it, Ben.
www.picker.asn.au. Go on there, sign up as a membership, and then basically you will be added to the database, and then you'll get one of the reminder emails out to register for that webinar.
Pretty good enough reason for me, I reckon, Ben, to go and get your $5 to go and listen to that webinar. Last thing, folks, Ben did his RBA announcement, which is always proven to be popular. So you've shared your thoughts and feedback to set up for the year. So just a reminder in your podcast feed, if you go to thepropertycouch.com.au, I think Ivis even puts that up on our YouTube channel. I should know this off the top of my head, but we definitely do have it there actually. So one of those 3 places you can go and listen to your feedback, which is always insightful, mate. Always well prepared. So well done. Hey, let's kick it off. My Mindset Minute theme today, Ben, is a continuation of how to win friends and influence people, which I did to the back end of last year. I probably didn't understand the enormity of how many weeks this would be to get through this book, but I'm still enjoying it, I've got to say. So I'll quickly let you know what chapter 19 is about. It's an appeal that everybody likes. So all people you meet have a high regard for themselves and like to be fine and unselfish in their own estimation, Ben. Even you, Ben, as a Collingwood supporter. J. Pierpont Morgan observed in one of his analytical interludes that a person usually has two reasons for doing a thing. Number one, the one that sounds good, and number two, a real one. So the person himself will think of the real reason. You don't need to emphasize that. But all of us, being idealists at heart, like to think of motives that sound good. So in order to change people, appeal to a nobler motive. So there's a couple of examples, which I always think the gold is in the examples in each chapter. Rockefeller, instead of saying, don't take photos of my kids, said sort of, oh, it's not in the kids' best interest for them to get so much publicity to appeal to the journalists and the photographers. There was a landlord collecting rent where one of the tenants said, look, I am demanding that I get out of my lease, even though there was 4 months to go, and the landlord was in the right. Basically said, you're a noble man, you're a man of your word. I'm going to let you decide, go and sleep on it for 3 days. And if you come back and you still think that's the right thing to do, I'm going to let you out of the lease. Well, of course, appealing to the right motive, this person said, no, we've got to honour our lease. There was another one where an automobile was trying to collect service bills. There were 6 people who hadn't paid. Again, through the humility, saying, you're a good person, then you know your car better than anyone. Tell us the reason why. I'll give you the bill, and then you tell me how much you're going to pay. 5 out of 6 paid the whole lot. 2 out of the 6 came back and bought another car. So the principle number 19 is very simple. Appeal to nobler motives. So there you go, folks. Hopefully that sets you up for a week. You might be able to use that or access that in your conversations, in your dialogue, whether it's at work, whether it's at home. So Ben, we've got a very, very, very special guest today to kick it off. We've got a chat with Cameron Kusher. It was an insightful interview. It was very, very fun. We did it earlier this morning. Let's cut to that interview now. All right, Ben, today we've got a very special guest. We are chatting with Cameron Kusher. He is the Executive Manager of Economic Research at the REA Group, specialising in primary and secondary data analysis, property market commentary and consultancy. Cameron has a thorough understanding of the fundamentals such as demographics, trends, economics, and spatial analysis, and is a regular keynote speaker for property-related groups, industry bodies, and corporation and government sectors. Welcome to the Property Couch, Cameron.
Thanks for having me, Bryce and Ben.
Oh, we're thrilled to have you on, mate. Absolutely thrilled to have you on. Long time in the planning.
It has been, but mate, you've got yourself to a position in the marketplace where your views are well sought after, well researched, and you're kind of in the sweet spot of your career. But it wasn't always that way. You weren't always at your peak. Can you take us back to the beginning and let us know how you got into the property industry? Assuming out of uni, what did the pathway look like?
So the pathway was an interesting one. I sort of knew I was interested in property back in high school, and probably didn't do as well at high school as I would have liked, but managed to get into property economics at university, thinking that I wanted to be a property developer. But property economics is taught by a lot of valuers. So ended up doing work experience in a valuation firm and that sort of thing, and realised that valuation definitely wasn't for me. So I did go on and work for a property developer for a while. They weren't the most successful property developer. And probably left a bit of a bad taste in my mouth. And I realized that wasn't really what I wanted to do. And then from there, I ended up getting a job with PRD Nationwide up here in Brisbane as a property researcher. And not that I'm a gun mathematician or anything like that, but I was always kind of interested in statistics. And so that led me into that role. And I've kind of never left these sort of roles since then. From there, I went and worked for a small consultancy firm that was advising developers on product mix and property types and price points of what to build. And then after that, I went and worked for RP Data at the time, then eventually became CoreLogic. We spent 11 and a half years there in a property research role. And then I joined REA Group in October of 2019 and have been here ever since. So always been very interested in property data, looking at trends, what's happening in the market. I'm still that way, and that's kind of where I've ended up here today.
Do you feel like you want to loop back to the beginning, given the understanding you have of our markets and the access to the research to actually, instead of advising the developers, to actually be the developer yourself?
Yeah, I don't think I'd want to go back to being a developer. I'm not the most a bit risk adverse. So probably a little bit too much stress for me being a property developer, particularly at the moment, given some of the seeing in the property development industry. So no, I'm quite content where I am at the moment.
So you sparked up my memory, Cameron, about the PRD nationwide stuff, right? I stumbled across, I think it was probably an old API magazine at the time, and then I was doing some, you guys were one of the first to start bringing out these little suburb reports and area reports. It was gold because it was free. We were able to get some understanding of all this stuff. It was way before where we are today, where you've got these geospatial tools and all these drilling tools that you can now do that's online. It was pioneering stuff. How much did you have to do with those reports?
Oh, look, I did write a lot of them, but the reality was that stuff had actually been set up at PRD Nationwide for years. So Archie and Gordon Douglas, who were the founders of PRD Nationwide, were quite visionary, I think, in that respect, that they saw the value of the researching of the property market long before a lot of their competitors do. They were eventually bought out by Colliers and consumed into that bigger brand. But I think, the business that they built just, starting up on the Gold Coast was pretty phenomenal back in those days. And obviously that's why a big company like Colliers saw the value in purchasing the business.
Yeah, it was definitely the go-to data for Queensland at the time. There really wasn't anything else. And then obviously RP data surfaced, and then off we've gone on this trajectory to where we are today. And now you find yourself as obviously the premier, sort of property portal and research team in the country, right?
Yeah, it's, obviously data has just, not even just in residential property, but in all aspects of business, have become increasingly important and probably increasingly commoditized as well. So I think all sorts of businesses are realizing the power of the data that they have. And for me, coming to REA, one of the really exciting things is that you have this huge audience that comes to REA, and you can gather so much data from what they're doing on your portal every day, what they're telling us, how they're inquiring with real estate agents. And it's really powerful, the sort of insight that you can get about what's happening in the market that just looking at transactional data won't necessarily tell you.
Hey, Cameron, your mum recently put out a book about being a child of an ASIO spy, which I found fascinating. I went and I dug into a couple of the interviews and had a little look. Can you give us your point of view of what was it like growing up with a mum who was a child of a spy? Was there any sort of flow-ons for you in your childhood?
No, not at all. If you actually read the book, the family basically never talked about it. I knew that my grandfather worked for ASIO, was a spy, but he died when my mother was 17, so I never met him. And I knew that my grandmother was kind of involved, but until I read the book, didn't really know how much was involved. But the three children never actually spoke about anything. I'd heard that they were involved with the Petrovs, who were the Soviet Union defectors back in the 1950s. But that's basically the only story that I'd ever heard. So reading the book was quite an eye-opener for me, because I didn't know probably 9/10 of the stuff that's actually in the book. So I don't have any juicy stories, unfortunately, from my childhood, because they were taught to not talk about it, and they didn't really talk about it.
What was the dialogue now with your mum, now knowing some of those stories? Has it opened up a whole avenue of chats at family catch-ups that is a new world? Yeah.
It definitely has. There's a lot to talk about. I think my sister's meant to be coming up from Melbourne this weekend, and we'll catch up for dinner at my parents' place on Saturday night. So I think there'll be, now that we've all read the book, there'll be a few questions and a few discussions about what's going on and what was said and what happened. So yeah, it should be an interesting catch up.
Now, obviously, my question there with Granddad being the spy and your mother being 17 when he passed, did he pass of natural causes? He wasn't poisoned or anything crazy like that?
No, but again, a plug for the book. The book's called With My Little Eye. And the story in there is that my mother, until she was in her 40s, actually believed that he was just off on a mission, that he hadn't really died, because her dad just went off and they weren't allowed to ask any questions when he took off somewhere for weeks at an end. So for a long time, and again, I didn't even know this, apparently she thought that he was still alive. He was just on a mission somewhere. So
you got to let that land. When she talked about that story when she was being interviewed on the telly, and you got to let that land, because imagine the mental gymnastics that are going on to process grief, or should I hold back, or is it really real? And she talked about Harold Holt and all those people. So this was normal stuff. So I can't imagine what was going on for your mum at that time.
No, I mean, unfortunately, her dad did die from a heart attack, and that was actually what happened. But, for a long time, she wasn't sure if that was the truth. And I think part of that is she wasn't actually there when he did pass away. So, experience what actually happened.
So a quick plug for the book name again, Cameron. What was
the name of the book is With My Little Eye, and it's written by a lady called Sandra Hogan.
Sandra Hogan, beautiful. Okay, so what were the dinner conversations at your dinner table around money or finance? I mean, as you say, you're a little bit more conservative. So was that sort of led through watching your parents, or?
My parents actually, probably back in the day took quite a lot of risks. So they, my father actually started his working career as a chalkie on the ASX when he was 19 years old. I knew he had shares, but I never knew what shares he had or when he bought. He always seemed to know when the gold price was going to go up, but he never actually seemed to buy any gold. And then, a couple of years later would say, I should have bought some gold back then. But they did probably, so I'm 40 this year, when I was probably 10, they started investing in residential property. And I think at one point they probably had 6 or 7 investment properties. So they had 2 investment properties on the central coast of New South Wales, in Umina. They owned investment properties. So we grew up in Bulimba in Queensland. They owned a investment property in Balmoral. They owned an investment property at a couple of investment properties over time at Sunshine Coast. So they were definitely property investors themselves, and have done quite well out of that. They also bought into Bulimba in Queensland in 1983. And if anyone knows Bulimba and what it was like in 1983, it was full of wharfies. It was full of, there used to be people getting stabbed at the pub on a Saturday night. My grandmother on my mother's side actually cried when they told her that they bought at Bulimba. It was the worst place in Brisbane to live. But it's clearly changed quite a lot since that time, and it's probably now one of the better places in Brisbane to live in very popular inner city suburbs. So they did very well out of there. But equally, they lived on Powderworks Road at Elanora Heights in Sydney, overlooking on the northern beaches, overlooking the coast. And if they probably could have kept that property, and if they did keep that property, they probably would have done equally as well, if not better, out of holding on to that home.
It's the interest in property, I suspect. There's that sort of, that emergence or osmosis coming into your inquisitiveness into getting into the property space. Well done.
But it doesn't explain the conservatism, though, Cameron.
Yes.
Conservatism from the fact that I just don't want to take on the risk of being a property developer myself. I take risks elsewhere in investments and things like that. But I don't need the stress in my life of being a property developer. I don't have aspirations to be a CEO or run my own business. I'm happy doing what I do, working for someone else, and letting the big bosses have the more stressful situations than I do.
And we're all the beneficiaries of you having that attitude, because we get to analyse your data, which will pivot to property. Can you give us a summary on the year that we will never forget? We've obviously taken a breath over Christmas and reflected on 2020, and your opinions were sought after enormously throughout a really unsettling time. What is your reflection on the year we'll never forget?
Look, I think obviously when COVID hit, there were a lot of predictions that property prices were going to experience large price falls. At REA, we never really subscribed to that. We thought that, yes, the market would probably fall, but, probably looking at a peak to trough fall of about 5%. And I think there's a couple of reasons why that was the case. And we felt that the Reserve Bank was going to cut interest rates aggressively. And we felt that there was going to be some stimulus coming for the residential property market. What we probably weren't so clear on is how flexible the banks were going to be with allowing people to pause mortgages. And obviously no one knew that the federal government was going to, do JobKeeper and JobSeeker, and that was certainly going to help things. But we thought that people were underestimating the impact of interest rate cuts and what that was going to have on the residential property market. And, we've seen it time and time again when the economy falls into the hole, residential property is the place that federal governments and state governments do like to stimulate. So, but in saying all of that, when you consider that it's the first recession in almost 30 years, we've come out of it quite quickly, and the housing market has proven to be remarkably resilient. But if you look at how things were going coming into the COVID period, we had the federal election in 2019. We had the relaxation of the macroprudential policies basically straight away after that. We started to see the housing market improving through late 2019. 2020 was looking early on like it was going to be a pretty positive year. Sales volumes were up. We were starting to see some more properties coming onto the market finally. And that was certainly disrupted by COVID. But I think partly also when COVID hit and the international borders were shut, people couldn't go and spend money like they would usually spend money. The government assistance was there for people. Some people could pull superannuation, $20,000 over 2 financial years out of superannuation. Home builder was announced. There was a lot of positives for the residential property market. And I think people were just looking at how low you can borrow. You can fix at 1.98% for 4 years. That's pretty attractive for people to take that risk and take on debt at the moment. And clearly a lot of people are doing that. And I think they're going to continue to do that this year.
Brilliant summary. I mean, yes, we also thought loss aversion was going to potentially play a role in terms of people's activity. I mean, it's not like the share market where it moves so quickly. We also thought the behaviour would be one of a wait and see. And that's what we did see, right? Just no stock throughout 2020 was also another significant element to that story. And that probably is a good segue into what we want to talk about today, which is really the outlook for 2021. I want to start with sort of, let's talk about the economic settings. So we saw Governor Lowe speak yesterday. We've got the quarterly update coming out in regards to their reforecast today. What's your read on the Australian economy, and then what's happening more from a global point of view, and then we'll sort of circle back into the demand and supply of property.
Yeah, I think Australia's economy is doing surprisingly well. I think, if you look at the RBA forecasts from mid last year, unemployment rate of 10%, then it was revised down to 8%. Unemployment at the end of 2020 was 6.6%. The employment participation rate was back above what it was pre-COVID. It was actually the highest it ever was in December of 2020. Retail trade was very volatile throughout the COVID period, but it's been strong pretty much ever since. We've seen household saving levels peak to the highest level on record. So people do have a lot of excess cash, and I think they don't really know exactly what to do with it, but just parking it in a bank is not going to get you any return. So I think we're seeing increasingly people putting that into mortgage offset accounts. And, I think a lot of people at the moment are looking for those second properties or looking to upgrade their property into a bigger and better property. More internationally, obviously, we're extremely lucky here in Australia. COVID cases are very low. We're at the point where we're, shutting down cities for a few days because one case gets out in the community. I think that shows you where, we think that one case out in the community is terrible. Go and have a look. I've got a sister-in-law that lives in Seattle, and have a look at what's happening in the US, have a look at what's happening in the UK. We're extremely lucky here. I do think we're maybe a little bit slow in our vaccine rollout. If it's good enough for the president of the US and the Queen of England and these sort of people to have. I don't know why we're delaying getting the vaccine out there. And yes, we're in a better position than most other countries, but I think, we want things to get back to more normal as quickly as we possibly can. More broadly for Australia, I think we are facing some challenges though. We know that there's been a lot of support from the Reserve Bank, the amount of bonds that they're purchasing, but they're also having trouble keeping the Australian dollar down. And obviously a lower Australian dollar will certainly help our exporters. So that's why they're continuing to buy these bonds at the moment. But when a lot of the other central banks around the world are going negative and the Reserve Bank seems extremely reluctant to do that, I think, that's why the timeline of any interest rate hikes is pushing out further and further at the moment, because there's still going to be some hurt from this recession for a number of years. And the reality also is that the Reserve Bank hasn't actually achieved its mandate prior to COVID either. Now, that mandate is for a 2 to 3% inflation rate over the term. They haven't hit that for 5 years. We haven't had full employment in Australia since before the GFC. The unemployment rate's falling nicely at the moment, but underemployment's still very high, particularly youth underemployment as well. So if you're coming out of university, it's quite difficult to find a job. And I think that's going to necessitate supportive monetary policy for quite some time. And it'll be interesting to see what happens over the next year, but you could probably argue as well that the government should step up with more fiscal policies to help as well. JobKeeper and JobSeeker have been great, but it's like, well, what comes next after that? What's government doing to get the economy back and firing? You can't leave it all to monetary policy, particularly when monetary policy is sitting at a cash rate of 0.1%.
You said hurt from the recession for a number of years. Where do you see that manifest? Where do you see that sort of appearing?
Look, I think the tourism sector is obviously going to struggle whilst ever we've got the international borders shut, and also while there's breakouts and state governments shut their domestic borders as soon as there's a breakout of 1 or 2 cases anywhere, that continues to hurt the tourism sector. Universities are obviously struggling at the moment because they have become very reliant on overseas students. We've got trade wars going on with China at the moment. They're not accepting a lot of our commodities over there at the moment. So that's a challenge to find, either make peace with China and get them buying our products again, or finding alternative partners, which is pretty difficult when China's your biggest trade partner. And just generally, if you look historically, so the unemployment rate, I can't remember the exact figure, but I think it was 4.5%, maybe it's somewhere in the 4s before the GFC. And it's never got back below 5% since the GFC. So even though, technically we didn't have 2 consecutive quarters of economic contraction during the GFC, we did see the unemployment rate spike, and it's never got back to where it was. So I think while we're making really good progress in terms of getting the unemployment rate down, we brought it down quickly, but getting it back down to even the 5% we were at before COVID hit is probably going to take a bit longer than most people are expecting.
I mean, you raise a good point around, the RBA hitting their target of gainful employment and also inflation target. And you're right. I mean, we're seeing some spikes in regards to inflation on certain elements because of, certain events that are occurring. But long-term inflation comes from wage growth. And that's their greatest challenge, isn't it, in terms of, especially with a changing economy and a digitalising economy. Have you got any views in terms of what might happen to wages growth?
I think it's going to be weak until we get back to, close to full employment, because there is going to continue to be quite a lot of slack in the labour force. There are going to be shortages of supply of staff for certain areas. We don't have specialists in every area we need here in Australia. And if people can't come in from overseas, that is going to create some challenges. Maybe businesses look at reskilling some of their staff to learn where they do have these skill shortages. But, as you say, the biggest challenge and the biggest thing that will drive inflation is, a better economy, more people employed, and wages growing again. So that's the key. And again, I think that's going to take some time. And the Reserve Bank governor flagged that he's not expecting that that's going to happen at least until about 2024. And he is starting to take a little bit of a less glass half full view of things, maybe a little bit more glass half empty. And that might actually be a good thing, because if we look over the last decade, a lot of the forecasts of where the Reserve Bank have said we're going to be over the next couple of years just simply haven't come to fruition. But I think that's why there is now such a focus on trying to get people back into work, get that unemployment rate lower. And that's what the economy needs to improve.
Lovely summary there. IMF quickly on the world stage, they upgraded their global forecasts by a couple of points to, I think it's 5.5 from 5.2. Do you, and they were talking about potentially a better recovery in the US, but a poorer recovery in UK and Europe. Do you conform to that view, or is there anything else that you think will have an impact on us down under?
It's probably hard to have too much view on that, but I think that, if you look at the vaccine rollout, parts of the world are doing very well. I guess it's going to come down to the efficacy of those vaccines. What happens with some of these mutant strains that we're seeing as well? Are the vaccines going to be useful for that? But I think where we are, the case numbers are pretty horrendous, but the fact that we have got a vaccine in less than 12 months, I think I read sometime last year that the fastest ever vaccine rollout prior to this was measles, and it took 4 years for that vaccine to be rolled out. We've rolled out a vaccine for COVID in less than 12 months. So if you're able to do that, I think that's going to be overall positive. And you look at China, it's pretty much back to normal, and obviously it's a big chunk of the world economy. A lot of the US, even though there's some butting of heads there, there's a lot of trade between China and the US. There's a new administration in the US that's probably going to take the COVID situation a little bit more seriously than the previous one does. So I think that we can be a little bit more optimistic about the world economy, but I think it'd be naive to think that there's not going to be some more challenges going forward as well.
Cameron, you published on your Twitter a chart that was interesting that, showing 2019, 2020 properties listed on your site that sold. And then for 2021, there was a massive spike, you can't see a chart on a podcast, but they were about 3,000 for the 2 years prior. And then they were up at about 5,000 for 2021. So what do you see happening in the early part of the year? And I'll try not to be too generalized around property because there's so many micro segments, but there's people lining up left, right and center for opens. We've got a supply challenge. There's no shortage of demand for a lot of the things you talked about before in terms of people didn't have anything to spend their money on. They want to put it somewhere. What's with all the experience that you've got, what with those storms converging, what are you seeing happening in the next 60 to 90 days in particular?
I think the market's going to be very strong over the next 60 to 90 days. So in terms of, we're 5 weeks into 2021. And if we look at how many sales we had over the first 5 weeks of this year compared to the first 5 weeks of last year, noting that's a very small sample size, but sales volumes are up 30.5% nationally from where they were at this time last year. And if we look at the areas where we've seen the biggest increases, now regional Northern Territory, and we're talking very low sales volumes there. They're up 210% from where they were at the same time last year. Darwin's up 93%, but some of the larger areas of the country, so Melbourne, sales volumes so far this year up 48.8% from where they were 12 months ago. Regional Western Australia up 68.2% from where they were 12 months ago. Regional South Australia up 40%. Regional Queensland up almost 35%. And then if we actually look at the regions where we're seeing the really big increases, it's a bit of a mixed bag, but generally it's actually regional markets. So regional markets, there's clearly a lot of demand there. And I think the sort of new normal situation that we're in, if we look back to before COVID, the people that were given flexibility to work from home or work remotely was generally more senior people in a business. March last year, most businesses sent their staff home, and in a lot of instances, people are going back in maybe a couple of days a week or just working from home full time now. So I think going forward, there is going to be an expectation that people are given that flexibility. And given that, I think what we're seeing is a lot more interest in regional markets and regional markets connected to capital cities. So in New South Wales, somewhere like the Southern Highlands and Shoalhaven, we're seeing, huge volumes of sales in that market. Places like the Gold Coast and Sunshine Coast, Geelong, Bendigo, Ballarat, these kind of areas where if you absolutely have to commute into the office a couple of days a week, it's going to take its time, but it's not the end of the world. But you can sit. There are other 3 or 4 days of the week you can work from home. You can have that great lifestyle. You can, if you're living at the beach, you can go down for a swim first thing in the morning, go for a surf late in the afternoon after you finish your work. I think people are realizing that there's some really strong benefits of working remotely and a more flexible working arrangement going forward. And I think longer term, I think what we're going to see this year is going to be quite interesting, because as things get back to more normal conditions, are people going to say, okay, well, this is why I went and lived in Sydney or Melbourne. Yes, the price of property is very expensive, but you've got all these great benefits, you've got bars, restaurants, all of that. Or are people going to say, hey, I can work flexibly, so I can do that Sydney or Melbourne job, and I could do that from Geelong and commute, or I could do that in Adelaide and commute back to the main office if I need to, or work in the local office in Adelaide a couple of days a week and work at home the rest of the week, or Brisbane or the Gold or Sunshine Coast or places like this. So we might actually see a bit of a change in where that demand shifts to this year. But, generally speaking, I think that we have got these very low borrowing costs. We've got really strong demand out there in the market. We've got a real lack of supply of stock actually available for sale. And the kind of combination of all those factors, I think, is going to carry on at least for the next 90 days. And I think probably through most of 2021. And we're going to see a really strong housing market with lots of demand, increasing sales and prices being pushed higher over 2021.
How do you segment regional based on some of those things you're saying? Because I think the key, what you said, is the fringe commutable regionals versus the non-fringe. And I think there's a real separation between what's got the longevity and what doesn't have the longevity. And some of it's just opinion, right? But is there, can we look under the veil of how you guys differentiate have you segmented the regionals, or is it just fringe commutable and other?
We kind of just talk capital cities and rest of states, but then we do look at, some of the major regional areas like, Gold Coast, Sunshine Coast, Geelong, Illawarra, Southern Highlands, Newcastle, those kind of areas. What we're actually finding is some of the strongest markets at the moment are actually a little bit more remote. So Coffs Harbour is an area that's really, really strong at the moment in terms of sales volumes, in terms of the number of views properties are getting per listing. Richmond Tweed obviously includes Byron and all the way up to the Queensland border, a really strong market there at the moment. The wheat belt of South Australia, which, you kind of scratch your head and go where that is, but it actually includes Albany. Now, Albany's, 6 hours drive from Perth. We're seeing really strong sales, views per listing in that market as well. So whilst you'd probably think that it's going to be just those areas attached to the capital cities, we're seeing some of those more remote areas. Now somewhere like Coffs Harbour, there is an airport there. You can jump on a plane back to Sydney if you need to do it. But I do question the longevity of those areas. I think it is actually going to come back to those areas a little bit closer to the capital cities, because I think whilst now people can work remotely, I think longer term, it's going to be more of a flexible working arrangement. Like, you still need to be able to get into the office if we ask you to come in here, and that might be a day or two a week. And that becomes a little bit more difficult if you're more remote than saying being in that regional market that is kind of attached to the capital city. Another interesting trend is, if we look at the capital cities, where we're seeing all of the demand and all of the really big increases in sales volumes are the outer areas of the capital city. So the Mornington Peninsula in Victoria is absolutely booming. Views per listing have more than doubled over the last year. Sales volumes are up significantly. The central coast of New South Wales. Now, a lot of people in Sydney will tell you it's not part of Sydney, but technically it is part of Sydney. Sales volumes booming there, views per listing booming there. And even in Queensland, places like Ipswich, Logan Bow Desert, some of these newer areas on the outskirts of the city are the kind of areas where we're seeing big increases in demand as well. So I think whilst, probably for the last 20 or 30 years, it's been all about, you've got to live close to the city centre, you've got to live close to where everything is. I think people now are valuing a bit more space. You move to these areas, you have a bit more of you have a better lifestyle, you might be able to get a bigger block of land to go and live on. And I think that's the kind of thing that's attracting people in this kind of post-COVID or throughout COVID and looking forward to what life looks like after COVID world.
I think there's some real gold in there that people who are listening to this should take to heart, because if you're buying to live in, that's one thing, but a lot of our listeners are sort of thinking about whether they're investing, and it's around about whether you're chasing a short-term growth as a speculator or whether you're chasing long-term consistent growth over time. And I think that the big question is, in 3 years' time, when we're not talking about coronavirus as acutely as we are now, Warren Buffett always says, buy something that you would be happy to keep if the market shut down for 10 years. And you've kind of got to have that mentality with some of the regions, I think, because you've highlighted some of the regions that have still got connection to CBD, but it's the regions that don't, even Orange and Dubbo, which are really great places, they're still for a consistent commute, that would be a drain. So it's something that people should keep in mind if they're doing it with an investment paradigm versus a total lifestyle change for principal place of residence.
Yeah, I guess from an investment perspective as well, some of the areas that I mentioned are the areas that we're seeing the biggest increase in views per listing for rental properties. So if we look in New South Wales, for example, so over the past year, views per listing for the central coast of New South Wales, it's up 150.9%. The outer western Blue Mountains is up 103.5%. Southern Highlands and Shoalhaven views per rental listing are up 183%. The capital region of New South Wales, which surrounds the ACT, up 110%. In Victoria, the areas where people are looking for rents. So rental views per listing have basically dropped everywhere in Melbourne, but they're up 75% on the Mornington Peninsula. They're up 80% in Ballarat. They're up in Queensland. It's the outer suburbs of Brisbane where we're seeing the biggest increases in rental views per listing. And then Sunshine Coast is up 125%, Gold Coast up 110%. So I think the other thing that we're seeing is that people are thinking, okay, maybe I'm interested in buying in this area, but let's go and try it for 6 or 12 months and see if we're actually ready to commit to this long term. So we'll probably start getting even a better idea of this over the next 6 to 12 months after people have gone and tried this out for a little while and seen if they can make it work and if they do like it. But again, the areas where we're seeing this is the popular rental areas have always been the inner city areas, apartment markets. It does seem to be shifting to the outer, more affordable suburbs and the lifestyle areas on the outskirts of the capital cities and touching into those regional parts of each state that surround the capital city.
I live on the surf coast here in Victoria. The vacancy rate is officially zero. So, and I can anecdotally on the ground, all the school parents are trying to be really creative in finding a rental. So that's one thing. And I've got a property on the Gold Coast that flooded recently. And so, long story short, we had to the tenant moved out, and as a result, once we fix up the water damage, the rents are going to jump somewhere between $70 and $90. Just from, because I got a tenant in the height of COVID where it was a little bit scary to now. So that just reinforces your point that the demand for rentals in some of these locations are off the charts.
Yeah, I think also expanding on that, I mean, we've seen what the government responsibilities have been around locking down metropolitan areas but keeping regional areas open. I think that's also, I don't want to be in another 100-day lockdown. So if I can get outside of that metropolitan area with the view that you might get a third wave or fourth wave or whatever that is. But I think I wanted to just circle back to your comments around the first 5 weeks, Cameron, because what a lot of people need to also put into context there is that was January and February last year. We were building momentum, as you mentioned earlier, right? We were on a crest of a wave, and then obviously COVID hit. So that first 5 weeks of last year was actually a pretty good starting point for the year before. It obviously false started, but to be 30% up on that nationally just tells you what we're sort of looking at. So obviously my next question for you is around the mix of owner-occupier activity from a demand point of view compared to investors, because traditionally lower interest rates, the investor sniffs around. But the earlier data that we were seeing was suggesting that this was actually more owner-occupier-led upsizes moving out to the outskirts. What's the data telling you around the blend of owner-occupier versus investor?
We've started to see investor inquiry creep back up. First home buyers are still outweighing investors in the market, which, there's a lot of stimulus for them. I think some investors are still a bit unsure. I mean, a lot of investors have usually had the mindset, buying in a city apartment, rent it out, negatively gear it. But with borrowing costs so low, I think it's going to be increasingly difficult in some instances to negatively gear a property. Some investors have probably been burnt a little bit owning those inner city apartment properties as well, and probably weighing up, do I keep this? How long are international borders going to be open for, or do I cut my losses and get out? But I think there's kind of a new wave of investors. I think, cashed up people from Sydney, Melbourne, Brisbane, Perth are looking at purchasing that second property that they might lease out through Airbnb or one of these kind of things some time of the year, and then go and use it on the weekends when it's available. I mean, if we look in regional Australia, obviously search activity has increased dramatically, but in terms of what people are searching for, the number of searches for prices over $1 million in regional Australia has actually shot up dramatically over the last 12 months as well. So whilst I think the popular narrative is, people can't afford Sydney and Melbourne, so they're moving to these regional areas, and that's certainly happening. But what we're also seeing is people that are already cashed up, they might already own a few investment properties, are now looking for that investment property at a fairly high price in regional parts of the country as well. And I think that the investors coming back into the market will really be something to watch this year, because the cash rate's at 0.1%. Whilst, historically you kind of looked for a 5.5% gross rental yield on a residential property, a 4% yield nowadays in a very low yielding environment is attractive. And if you can get some capital growth on top of that, then I think from an investor's perspective, that ticks the boxes. But again, I think different kind of investors, it's probably people that maybe aren't looking to negatively gear a property. Maybe the positive gearing of the property is fine for them. I think that's the sort of thing. And I think the other point to make in inner city markets is, if you have a look, the 1 and 2 bedroom stock does seem to be struggling, but 3 bedroom stock, there's, from everywhere that I've looked at, there's a real lack of supply of 3 bedroom rentals in inner city markets as well. And when they are available, they're being snapped up very quickly at really good prices. So I think the mindset of the investor just has to change a little bit. It's not just going to be go and buy an inner city apartment or go and buy an inner city, cottage of 1 or 2 bedrooms. It's going to be something a little bit larger in the inner city, or moving to these outer suburban areas or these regional markets attached to the capital cities.
So let's finish off that the demand side of the equation, because I think it's definitely the case that the rising tide's going to lift all ship. Money's cheap, asset appreciation is going to occur in a lot of areas. The other interesting part is migration. Like we expected that the demand story in our predictions last year, that we would start to see some of that immigration occurring. This is occurring without that immigration story. And we've just seen the Federal Health Minister earlier today talk about the borders opening as early as middle of the year or to the second half of this year. We're going to start to see those migrants come in, those students coming back, which obviously be great news for those people who build in the medium and high density stuff to just have some demand for their product. Tell us a little about your thoughts on what that will do, because the vast majority of the migrants arrive and settle in Melbourne or Sydney, and they're sort of usually from densely populated places around the world. So they love that sort of inner city area. What's your view on that?
Look, I think getting the borders back open is going to be incredibly important for those inner city apartment markets, particularly in Sydney and Melbourne. I think until such time as we start getting people migrating back to Australia, they're going to be under a lot of pressure, and they're going to have challenges finding tenants. Landlords are going to have to cut their rental rates to attract someone, or even just to keep whoever they've already got. So the sooner we can get the borders reopened, that's good news for them. I think also for developers, because we know that Home Builder has really helped, but we also know that Home Builder has largely helped land developers, apartment developers, just some of the requirements, having to kick off within 3 months of signing the contract for a lot of apartment developers, home builder hasn't provided any assistance at all. Now, the next 3 months, that gap's 6 months, and that might help some apartment developers a little bit more, depending on timing again. But ultimately, I've been saying, without home builder or without an extension to home builder, once that's gone, if the international borders are shut, the developers are going to find quite a challenging market. And the reality is developers rely on first home buyers, which are absolutely booming at the moment. And they often rely a lot on investors who aren't necessarily particularly active at the moment. The third market they really rely on is people that have migrated to Australia, because the rules are that you have to buy something brand new when you come to Australia. So that means a brand new house on the outskirts of the city, or that means a brand new apartment in the inner city market. So if we can actually get those borders reopened sooner rather than later, then the developers will be happy, universities will be happy, businesses will be happy, and that will start to see an improvement in that market. But honestly, I think that the rental market in inner city areas is probably going to change and going to be changed for quite some time. I think it's going to take a very long time for rents to recover back to where they were pre-COVID, because I just don't think that the demand overall is going to be as strong as it used to be, because a lot of the younger people that were renting in inner city Melbourne or inner city Sydney may now be more comfortable, if they can work from home, renting a little bit further out and not having to pay those higher rents.
So I just want to talk about that rent side from the demand point of view. The question there is, obviously we're going to see a building boom, as we talked about, into freestanding and land developing. That's also going to take or put some pressure on the rental story, isn't it? I mean, because ultimately, if the vast majority of those people are renting and then they go and move into the home that they've just bought out in the suburbs or in the new estates, has any of that analysis been done yet with the REA Group in terms of the level of rental demand generally?
Not a specific analysis, but I think you're right there. I think, there is all this stimulus around getting first home buyers to buy their markets. So that does then buy a property. So then that does create some challenges for investors and owners of rental properties, because you're shallowing that pool of potential renters there at a time when international borders are shut. So, every January we usually get this big influx of international students coming into the country, which isn't coming. And I think other things, there are these tensions with China at the moment. So even when the borders do reopen, are we going to see as many Chinese students coming into Australia as we were before COVID? Maybe, but maybe not. Who really knows? So I think it is going to have some longer term repercussions for the rental market, getting so many people into that first home. But there's always going to be, people moving to other states for work or for study. There's always going to be some people that just don't want to own a property and are happy to rent, for the next 15, 20 years, or maybe even for the rest of their life. So there is going to be rental demand out there, but it's probably for the next few years not going to be as deep as it was. But I'm not really under any illusion that I think once the borders open in Australia again internationally, there's going to be strong demand for migration to Australia. And even though at the moment I think there's still caps of 150,000 a year, I wouldn't be surprised if the migration program gets ticked up a lot higher than that once the borders reopen. And I think, given how Australia's done with COVID, you look at Australia versus the US, a free healthcare system here in Australia, not the civil unrest that we're seeing in the US. Europe, you look at what's happening in Europe. Australia effectively shut down its borders. Britain couldn't even do that, and it's an island. So I think there's a lot of things that in the aftermath of this will make Australia pretty attractive. And there'll be a lot of migrants that want to come here.
It's not hard to see why people want to establish roots here. It's not hard to see why the next decade should be a very prosperous decade for people owning property with usual ups and downs in certain segments. I think the key message that I want to give to our listeners, based on the backdrop of everything that you've been saying, Cameron, is two things. One, we have that anecdote, when the tide goes out, you see who's been swimming naked. The opposite's actually the tide's well in at the moment, right? So it's hiding everything. So I think point number one is it's still incredibly important to make sure asset selection remains front of mind, because there'll be a real FOMO in the next 60 to 90 days, people wanting to jump on and not miss out. So they've got to make sure they don't drop their standards. That's number one. And number two, for those people that are buying, it's a seller's market. We've clearly articulated that, but you've got to be buyer ready for seller's market, which means minimum conditions that you can make your offer as attractive as possible, and don't get too cute with the agent, because our team is, we buy a lot of properties off market as a group, as a team of buyers that we have. But right now it's about jockeying for position, getting in front of as many pre-listings as we can, and then readying the buyer. So as soon as the starter's gun goes, we're ready, and we're in ability to make an offer that's strong, purposeful, and gives a vendor something to think about. So I think, the takeaway for everyone on the back of what you're saying is the tide's in, so don't drop your standards, and don't be an amateur when you're making an offer. You've got to be ready to pounce.
Yeah, 100%. I mean, we actually just bought a place. We're moving into a new place in a couple of weeks. And it was one of these, best offers in by X date. And the reason we actually got it was because we didn't have to sell our property to move into this property. And we were happy to give them a long settlement. So I think you've basically got to have your financing in place, but you've also got to be able to be flexible in this environment, because there's a lot of people competing for it, but also for anyone that actually is selling their property and having to buy, it's very difficult for them to find anything at the moment as well, because there is this huge lack of supply. And I think here at REA, we've been trying to get the message out that it is a great time. There is a lot of buyers out there. We're seeing more searches on our platform than we've ever seen before, but there's been this real reluctance for vendors to actually bring their properties to the market. And I suspect that some of them have just sort of gone 2020, just write that year off. And hopefully over the next couple of months, we do finally start to see more and more vendors getting that confidence to bring their properties to the market, because there is a desperate need for more supply there at the moment.
It's fingers crossed. It's self-fulfilling, isn't it? Like, I won't sell until more listings come up, but then that becomes the spiral in the wrong direction, right?
And so that is the question. Are you seeing, which is what we're praying for, more listings in the first 5 weeks? What's the reading on that side?
Unfortunately, we haven't seen much of an increase in listings yet. You always see a fall away during the January, late December, January period, but we're not seeing it come back even to the magnitude that was early last year. Now, again, that might be that kids are in school now, back from holidays. Let's start thinking about this now. So whilst we haven't seen it yet, we're hopeful that over the next few weeks, we start to see more and more supply coming onto the market.
Any murmurings from the agents to sort of say that they feel like they've got a seller pipeline or any of that stuff yet?
The agents are telling us that, that they've got heaps of sellers and they're trying to just find vendors at the moment. I haven't probably spoken to too many agents early this year, but a lot of them were saying to me late last year that there were vendors ready to go, but they were holding off till February next year to actually bring that to the market. So let's hope that's the truth and that starts to come to fruition, because, we're 4 days into February. Start showing us some evidence that's happening.
Yeah. And obviously help flatten it out a bit, because if a bit more stock comes, fulfill a bit more buy, we don't see these prices well over reserve, that then starts to become a snowball running down the mountain. So we're obviously going from responsible lending now to responsible borrowing. Do you have a view on that, Cameron?
Well, a lot of people have said to me, the responsible lending laws are getting axed. Well, it's still actually got to get through Parliament. And, the Liberal Party don't have the upper house. So it's not sort of a fait accompli that we are going to see those responsible lending laws relaxed. I mean, as I said, I've just taken out a mortgage, and the number of questions that the banks wanted to ask and some of their rules around, rent trimming on investment properties and that, just a little bit crazy at the moment, sort of a one size fits all thing. So I think it's going to be an interesting one, because the strength of the market, prices are growing again. Josh Frydenberg has said that it's hindering the market, but the flip side of that is, well, look at what prices are doing. Look at how many sales are happening. Maybe it's not. So I'm not still 100% certain that it's actually going to get through Parliament, that we can water down those things. But I think it has, it's kind of a pendulum, that at one point it was too far in one direction. I do think that some of the questions that are being asked now when you take out a mortgage is going a little bit over the top. And we saw what happened with Westpac and ASIC last year, the Wagyu and Shiraz case, that just because you're spending one way when you have a mortgage doesn't mean that you're not going to change your spending behavior when you take out a new mortgage. So I would like to see them watered down a little bit, but it's finding that balance right. In terms of property prices and what we're seeing, we are seeing some pretty strong growth over the last quarter of last year in terms of property prices. And, as I've said, interest rates are going to be low for a very long time. You have to fix those mortgage rates to really access them. But, next 4 years, getting a mortgage rate of 1.99% is pretty attractive. And unless we can actually see a big increase in the amount of stock on the market, it's pretty hard to not expect that we're going to see really strong price growth in 2021 and probably into 2022 at this stage.
And just blending those two conversations together, because I mean, at the end of the day, demand these days is still a product of lending, right? I mean, most of us can't pay cash for property. So any views on potential throttles that you may see, given that the residential property market could get a bit frothy in areas, whereas we absolutely know the Reserve Bank want to lend money into business quarters because that stimulates jobs. Do you see APRA potentially playing a role if we do feel like FOMO is and irrational activity going on out in the marketplace?
Definitely. I mean, the governor spoke the other day and said, property prices haven't moved for 4 years, which is essentially true. So let's not get too far ahead of ourselves with a bit of growth at the moment. And he also said that he's not seeing any, relaxation of lending laws at the moment or mortgage quality. But, the Reserve Bank had to be dragged kicking and screaming the first time to use macroprudential policies. And I think they discovered that they are quite effective. So I have no doubt if we do continue to see really strong price growth that they will be reintroduced. But I think that's probably more of a 2022, 2023 sort of prospect. I think it's unlikely at this stage we'd see anything this year. But thereafter, maybe we'll see some tightening of those lending policies. If prices jump 10 or 15% this year and then start looking like they're going to do it again next year, I don't think they'd hesitate to do something to try and cool things off a little bit. But in business lending, I think one of the things that a lot of people forget is a lot of small businesses are funded through the equity in residential property, right? It's extremely hard for a lot of small businesses to get loans from banks without, putting a mortgage on their residential property. So higher prices in residential property markets in a sort of indirect way can help smaller businesses to go out and fund themselves and do expansion as well.
Wonderful summary. So if we were to sort of put in some priority order around the grounds in terms of markets to watch, do you have an assessment on that, or are we basically going to see pretty much all markets performing strongly?
I think we're going to see all markets performing strongly, but I think it's probably the smaller capital cities that are going to do well. I mean, Western Australia's done very well over the last 12 months and has actually been really helped by its hard border because it was shedding about 12,000 people net a year to other states. And again, I think if people can work remotely, I mean, I don't think I'd want to do the commute from Perth to Melbourne or Perth to Sydney too often. But I think the aftermath of COVID will probably see more people staying in Western Australia and maybe not moving over to the eastern states. So I think Perth will do quite well. I think the southeast corner of Queensland will do quite well because it still has that, people forget that in 2007, Melbourne and Brisbane property prices were essentially the same. Now the gap's about 25 or 30%. And I think, again, if you can work flexibly, Gold Coast, Sunshine Coast, both of those have regular flights to Melbourne and Sydney. So you could base yourself in those areas and go back into the head office a couple of days a week if you needed to. And even a market like Adelaide, I think that market is going to do reasonably well as well, just because you're quite close to Melbourne and Sydney if you need to jump on a plane. And then I think the outer areas of capital cities. So whilst I think somewhere like Melbourne is probably going to be a bit more challenged just because it's had a harder time throughout COVID. But I think, Mornington Peninsula, Geelong and the Surf Coast, Bendigo, Ballarat, those kind of areas are going to perform quite well over the next 12 months. Inner city apartment markets are going to struggle. And in New South Wales, Central Coast, Southern Highlands, the southwest of Sydney. But I also think the really blue chip areas are going to be quite strong as well because the people that live in those areas are the people that have largely not been affected by COVID at all and are going to be looking for those opportunities to upgrade into those bigger and better properties. Somewhere like the Northern Beaches in Sydney, for example, we consistently see as the highest number of views per listing, but that's obviously a function of a lot of people wanting to be in there, but no supply as well. And that's going to push up prices in those kind of markets as well, that clearly a lot of people want to get in there, but there's just no stock coming onto the market. So I think generally pretty strong right across the market, but I think probably the places to watch are Perth and the southwest of WA, southeast Queensland, Adelaide, and then the outer fringe of Melbourne and Sydney and those regional areas sort of attached right to them.
There you go, folks. The tide is in. Don't drop your standards all around the country. Make sure asset selection is number one. But hey, Cameron, it's easy to see why you're at the top of your game. We appreciate you sharing all your insights. Great way to kick off our year as we come out of our summer series to really set up for the outlook ahead. So we appreciate your time. We'll put the link in for your mum's book. If you could put a little word into your mum, it'd be great for an audio book version, because then I can do it at 2 speed. That'd be great. But thanks again for coming on and sharing your wisdom and your insights.
Yes, no worries. Thanks, Bryce. Thanks, Ben.
There you go, Ben. Some insightful critique of the Australian property market and the economy in general.
Here's my guess, Bryce. People are going to stop listening at that at 1.5 or 2 times. And I reckon they're going to listen to that at 1 times, just so they can let all the gold sink in. For those people who are new into this space, there's a lot of great knowledge there that he shared. For those people who are have an interest and a sort of continued interest, you get sort of that solidification of your ideas and your thinking in terms of, yep, that's right, that sounds right, that's logical. So they'll also back up. And so it's just a confidence builder for those people who are coming into space. And for those people who need to understand where they need to do their homework, some great insights in there and some good tips from Bryce as well in terms of pre-buying in there. So I think, it's probably an episode that people might rinse and repeat on.
And how's the pedigree? PRD nationwide, and then just go down the road for 11 and a half years to RP Data /CoreLogic, and then just jump over the fence to REA. Like that's some serious CV heavy lifting there from. So he clearly knows his stuff. So Cameron, thank you for coming on. We appreciate your insights. We reckon our community will definitely appreciate your insights. And folks, use that information to set yourself up for the next 60 to 90 days. Make sure you're prepared. Make sure you buy the right properties, and absorb all of those insights to your benefit going forward. Hey, my life hack today, Ben, is a story. Over the summer break, I had the good fortune of taking my family over to Tasmania, which was fabulous. And I had an accidental digital detox. So long story short, I'm with Telstra. I had my phone on the bench. It dropped, the corner of the screen cracked, and then it bled. So for about a day and a half, I could use the screen. Still, you know what it's like when you've got a cracked screen. But I'm about 45 minutes from Hobart, and so I'm just dealing with it for a couple of days. Then I'd organised to get it sorted in Hobart, get the screen replaced. And as I'm telling my wife what my plans are, she gives me this look. Like one of her bucket list items was to go to the Salamanca markets, and I'm thinking I'll drop you for the Salamanca markets. I'll go. She just gave that look, Ben. You just know it, right? Just don't mess with the itinerary. So I thought, okay, no problem. I can wait. No, I'll do it later. So long story short, the decision not to get it fixed in Hobart that day, because we were moving further north, meant that I didn't have access to my phone for about 2 weeks. Mate, it was the greatest thing I can say, because I didn't pick it up. I didn't check the Google map. But here's the thing. We then moved into St. Helens. So for all the Tasmanians, that's the northeast of Tasmania, and my wife has Vodafone, so she's not with Telstra, right? So I'm out of action with Telstra, can't do anything. She's with Vodafone, no service, right? So all we had was this very faint, thin wireless signal, just to do some basic stuff. But for all intents and purposes, it was a pure digital detox for a couple of weeks. So my life hack today is to go through and find a spot in your calendar somewhere in the year. Probably Christmas is the best, but if you're going on holidays, to actively digital detox and just put the damn thing away. because it was amazing. There was no iPads on our trip. Our kids were talking to us. We were engaging in meaningful connection, and my wife and I weren't. You don't have this problem, Ben, because you're not addicted to distraction like I am. But I often pick up my phone when it's not appropriate. So there you go, folks.
On things, but just different things.
Yeah, that's right. So there you go. My life hack today is actively look for an opportunity throughout the year where you can give yourself a digital detox, because it was meaningful and it was a highlight of my trip. And if you haven't watched The Social Dilemma on Netflix, that'll help you with the digital
100%.
So there you go. So that's my life hack. What's making property news today, Ben?
Well, I thought on the back of what Cameron was telling us about the market, I wanted to take a quick deep dive into our other great, friends at CoreLogic as well. We have some amazing, friends at all of the big data repositories.
Research houses.
This one is from CoreLogic around the auction clearance rate. So it was first real weekend open, right? So I think there's some interesting numbers in here.
Turn the fan on, will you, mate? It's a bit hot around here.
Yeah, it is a bit hot. So there's two things I'm going to do. I'm going to read out the city. I'm going to read out the last year's auction results and then this year's percentage. Now, of course, it will change during the week, but just give you. And I'm also going to say the number of auctions last year versus the number of auctions this year, right? Mm-hmm. Just to sort of give you a flavour of, we haven't sort of just walked into an open. We've sort of, I don't know, maybe the doors have opened, the balloons have dropped, the band starts playing, and it's party time in the property. So here we go. Sydney, right? Clearance rate 82.9% from a total number of auctions of 272 auctions. Last year, 72%. So basically 82, so up 10% already, and 158 auctions to 272 auctions. So a huge increase in a percentage terms in terms of that. So we're still, we're not at full strength. Wait until the end of the month. We will start to see some numbers really improve in terms of volume size. Melbourne, 83% price on 388 auctions. Last year, 65.8% clearance rate. That's not a bounce. Yep. It's not a V-shaped recovery on 211 auctions. So 388 from 211. So big numbers there. Brisbane, we do get into the smaller auction numbers here, so we'll move through these relatively quickly but we had a 55% clearance rate. That was up from 36 last year on the same number, around 50 odd properties. Adelaide, 83% clearance rate on it compared to 52.9 the year earlier. Interesting, this is the only market that had less auctions. So you had 89 auctions versus 105 last year. Perth, 67.7% off 15 auctions is not really big versus 38, but double, right? And then Canberra, 84% clearance rate instead of 59.3. That's like
smoking.
Okay, oh my God. So, yep, it's tough out there, crew. And that's going to be the message. It is not going to be a picnic. No. But let's hope and pray that those vendors who are thinking about selling, well, autumn could be a cracker in terms of if you want to get a good result. It is definitely turning into a seller's market very quickly, Bryce.
You have to be prepared to survive, Ben. You have to be able to know what to look for. You need to be able to see value quickly. You need to know what makes a great property. All of the things we've been reinforcing for but you need to know those intuitively, experientially, and you need to be able to pounce. So that's why I said in the chat we just said, Cameron, our team is primed and ready to make sure that they are positioned, because you can't be an amateur or an intermediate in this market. You need to know what you're doing to actually secure the right properties that will last for a long time, not just getting it on any property. You've got to get the right properties. And you've just reinforced that with what's making property news. So there we go. Cameron, we thank you again for sharing your wisdom. Thanks for joining us again, Ben, as we kick off another fabulous year on the Property Couch. We have a goal to make each year better than the year before. So we are going to strive for that in 2021, you, me, and everyone here on the team. So until next week.
Well, Bryce, once we get that survey analysed, we've got a few ideas now, thanks to our listeners telling us what they want. So, yes, until next week, Bryce, knowledge is empowering, but only if you act on it.
Act on it, folks. All right, see you next week. Hey there folks, Bryce Holdaway here. Before you go, if you're new to our community and only listened to maybe a handful of episodes, I thoroughly recommend that you go all the way back to episode number 1, where we unpack all of the foundations when it comes to property investing. Now for those of you that might be a little bit time poor, I've got good news for you. We have a binge guide that you can download straight away, which summarizes the first 20 episodes where Ben and I unpack the foundational pillars of the A, B, C, D, and so much more. And you can get that straight away. If you go to thepropertycouch.com.au/TPC20, you can download it and consume it whenever you want. It's completely free and available now. And for those of you, just a quick reminder that nothing we've spoken about today constitutes financial advice. We recommend that you reach out to your licensed professional advisor so that you can look at your unique circumstances before acting on any information. Now don't forget, go to thepropertycouch.com.au/TPC20 and get your binge guide today.